Not the best day on the markets, but Bitcoin is actually doing very, very well, holding at 123,500. And you know why that's happening? I'll tell you why that's happening. Because Bitcoin is now following the gold trade, right? And if you look at gold is at $4,056. It's over that $4,500 level. And that's why everyone thinks that Bitcoin's running. It's the catch-up trade to gold. But let me tell you that there's actually a much bigger thing at play here. And we need to discuss the much bigger thing at play here today. And the reason why I want to discuss this much bigger thing at play here today is because there is a chart that's more important for Bitcoin than the gold chart. And that chart today has made a very, very, very significant move. I want to show you what the significant move is. And when I show you, it's going to give you 𝗙𝗃𝗀𝗀, which is like goosebumps, right? So the more important chart for people to watch when they're talking about Bitcoin, more important than gold, is to actually watch the silver chart. And if you look at the silver chart, and I'm going to bring it down to daily for those of you who are over 45 and have got bad eyesight and you need us to zoom in. Silver has just gone to $51.20. Now, you know what that means? That means that silver has broken a cup and handle pattern, which is a 50-year-old cup and handle pattern. And this has very, very, very big significance to Bitcoin. Now, we're not one of those old man's channels that are going to sit here and talk about commodities and stuff like that. But we have to talk about the silver chart, because this silver chart is the most important chart when it actually comes to Bitcoin. And that's what I'm going to show you today. And yeah, it's going to be a very, very, very big show. So let's get going, guys. Let's get going. Wakey, wakey, rise and shine. For those of you who are celebrating, happy 𝗙𝗔𝗘𝗔𝗧 Day. Happy 𝗙𝗔𝗘𝗔𝗧 Day. I've been telling you guys for how long that the 𝗙𝗔𝗘𝗔 thing is going to happen. I even told you this morning at 8 o'clock my time this morning when 𝗙𝗘𝗔𝗘 was at 15 cents. I was like, guys, happy 𝗙𝗘𝗔𝗘 Days to those that celebrate. Anyone that was in Frontrunners got this call 100 times, but also got this call this morning. And now they're eating good. I mean, just look at that. That's the candle in 𝗙𝗘𝗘𝗔. Don't say I didn't tell you. Like literally, this is 8:34 this morning, and this is the green candle. Like, I mean, come on. And so today, the people in Frontrunners are really celebrating. Just look at these moves that people are making in Frontrunners. I don't know who this Ziggy guy is, but Ziggy, what the hell are you doing making 15%? I gave you. This guy made 106%, 479%, 250%, 82%. Ziggy, what did you do wrong, bro? Maybe he did you got in at 17.16 and you got out at 17.60, 16. Bro, you're playing this all wrong. Anyway, happy 𝗙𝗘𝗔𝗘 Day to those that celebrate. For those of you that don't, honestly, you need to start thinking about joining Frontrunners, because that's where we give you guys all the amazing calls. And I gave you guys the 𝗙𝗘𝗔𝗘 call this morning. I think Frontrunners has really the highest hit ratio now of any group out there. If you want to join Frontrunners, Johnny will at some stage put a link in the show for people to join, and then you can join it for 30 days. If you don't make more money, he says he's send it to you to drop in. If you don't make more money in Frontrunners than what the subscription cost you, then I will refund you your money personally. That's basically how it is. Anyway, let's get on with today's show. Happy 𝗙𝗘𝗔𝗘 Days to those who are celebrating. What, by the way, happened is there's a massive announcement. Now, get this, there's a big string of announcements here. So, this company claims to have bought 𝗙𝗘𝗔𝗘. So Resolve AI acquires, this is a NASDAQ listed company, acquires 𝗙𝗘𝗘. And then if you dig really deep here, right? And you go to x.com and you go to Paulo Arduino. I've tried to show you something. So Paulo, P-A-L-O, Arduino. So Paulo Arduino actually also tweeted about this Resolve AI company. And I'm just wondering if he's behind it or something. Let me just see where it is. Here we go. Powerful between Resolve and SmartPay. So something's going on here with this Resolve AI, and they've just bought SmartPay, and they've just bought 𝗙𝗘𝗔𝗘. And I think they're starting a global AI payments company, and I think 𝗙𝗘𝗘 is going to be part of it. And that's why we have, ladies and gentlemen, green candle. Big green candle. Anyway, for those of you that missed it, next time you'll catch it if you're in Frontrunners. Otherwise, for those of you who are here, guys, we're gonna have a fun show today. We actually, you know, when I started doing the show today, when I started writing the show, I kind of felt like, am I that guy on Kitco News, right? Where I'm going to basically start talking about commodities, but we actually have to talk about commodities today. The reason why we have to talk about commodities is because this chart is the one that's actually driving Bitcoin. So, big show. I need you guys to do me a favor. I see there's only 190 likes. We need to get to 300 likes very, very, very quickly. 𝗏𝗏𝗏. So, 𝗏𝗏𝗏, can you hit the like button? Theo, can you hit the like button? Can you guys all hit the like button? Let's get going. Okay, cool. So, here we are. Bitcoin, as I said, holding pretty well on a day where I think the altcoins aren't doing as well as Bitcoin's actually doing. Some moves in the altcoins that are worth talking about. One is Zcash, and I told you about Zcash. 𝗏𝗏𝗏, what day was it that I came back and I said privacy, buy Zcash? It was Monday or Tuesday? Monday. I told you to buy Zcash. Today, it's at $195. I did tell you yesterday I'm starting to exit the BNB trade. I took some profits on BNB. Here's the Astor down 10%, Cake down 10%. I told you that yesterday. I said I'm starting to exit the BNB. I just saw too many people getting into the trade. It seemed a little bit heated. I saw too many YouTubers making videos about BNB. After I made that video about the 7 narratives, which, by the way, if you haven't watched, you should probably go to our other channel and actually go and look at that video. I made a video about the 7 narrative, 7 stages of every single narrative. Yeah, it's this one over here. And basically, that's when I realized that we're at the end of the BNB trade for now, and I don't want to be the bag holder in this BNB trade. So I basically decided to sell my bag there. I didn't sell the whole bag. I sold about half. And I see a lot of other people are now starting to follow. When it comes to Bitcoin versus gold, so the reason why Bitcoin is holding up so well is because right now Bitcoin is very, very much correlated to the gold trade, right? And everybody thinks that Bitcoin is basically following gold. And if you look at it at face value on the monthly chart, it does look like it. That's the monthly chart of gold. That's the monthly chart of Bitcoin. Both of them absolutely parabolic, right? But the more important chart here, I mean, they're both important, but the more important chart here is actually the silver chart. I'm going to show you why in a couple of seconds. But silver is breaking out of a 50-year cup and handle. Can you imagine a 50-year cup and handle? Now, both the other times, or the last time that it tried to break out, it got rejected. And this time it actually looks like it's gone through like a knife through butter, right? And this chart is more important for Bitcoin than the gold chart is for Bitcoin, right? Even though the gold chart is important, because we know that Bitcoin tracks gold with about an 80 to 100 day lag. And that 80 to 100 day lag says that in about a month to a month and a half, Bitcoin goes parabolic. That fits into the longer cycle theory. So when you talk about the longer cycle, you say, okay, Bitcoin is going to only go parabolic in about 2 months. That should give us a much, much, much longer cycle, right? So both charts are important. We are tracking the gold chart with the 80-day lag, but it's actually much bigger than that. And I'll show you why it's much bigger than that. Because it's not actually about the chart, and it's not actually about tracking the commodity. It's about the reason why this is happening. When you understand the reason why this is happening, and that will show you why the silver chart is starting to move, then you'll understand why I'm so excited about the Bitcoin move and why there's no way that the cycle basically ends now, okay? So let me explain to you what's going on here. The first part of it is you need to understand the correlation. So you've got the global M2 money supply. The global M2 money supply basically represents the amount of money in the economy or in all economies, right? When you look at the global M2 money supply, gold lags the M2 money supply, right? So you've got gold and the M2 money supply, and then you've got the M2 money supply and Bitcoin. Gold lags the M2 money supply, and Bitcoin lags gold, and therefore Bitcoin also lags the M2 money supply, right? It lags the M2 money supply by about 100 to maybe 180 days. So sometimes they say 6 months or whatever else. And it lags gold with 180, 200 days. I've been trying to get the right number of days, but it's very, very, very difficult to actually put your finger on exactly a number of days. But suffice to say that the leading chart here is the global M2 money supply, which represents all the money in circulation. then gold follows that. And that kind of makes sense because when there's more liquidity, people get nervous of things like inflation. And what they do is they buy the safe haven asset or the limited supply asset, which is actually gold. And then later on, people move into Bitcoin for the same reason, right? But the trade is actually much deeper than that. And the deeper part of the trade, you can kind of see when you look at these two charts over here. So the first chart is the 𝗙𝗫𝗊. If you look at the 𝗙𝗫𝗊 is broken down since the beginning, since October 22, from 115 all the way down to where it is now, which is 99. It's just broken below that 100 range. And if you look at it since when Trump came in, or just after when Trump came in, since after the inauguration, it's gone from 110 to 98. What that means, it means that the dollar is devaluing. Okay, so the dollar is devaluing. Why is the dollar devaluing? We'll talk about that in a second. But the dollar is not the only currency devaluing. The other currency that's devaluing is the yen. So you've got these two major currencies that are devaluing. This is the 𝗙𝗫𝗊. The 𝗙𝗫𝗊 shows the correlation, let's just quickly get you guys the exact components of the 𝗙𝗫𝗊. So components of 𝗙𝗫𝗊. I want to just make sure that I get the actual splits right. What is the US dollar index? Let's just quickly see that I actually get you guys the splits. I don't actually understand why anybody still uses search, let alone why I use search. What are the currencies in the 𝗙𝗫𝗊? Okay, there we go. So it's the euro, 57%, the Japanese yen, the British pound, the Canadian dollar, and those are the components of the 𝗙𝗫𝗊. If you look at one of the biggest components of the 𝗙𝗫𝗊, it's actually the Japanese yen, right? And so what you're also seeing is that the Japanese yen is also devaluing. So if you look at the chart of the Japanese yen is also devaluing a lot. So you've got two and actually a whole lot more of the world's major currencies being devalued. What does that actually mean? It means that countries are devaluing their currencies to get themselves out of financial messes. What do I mean by financial mess? Well, for example, if you look at where the US is at the moment, the US still actually has quite high inflation. They've got inflation at about 2.9%, and Powell is reducing interest rates. It's the same thing when you look at Japan, right? Japan actually has high CPI. So look at the Japanese CPI, also 2.7%, and they're not increasing the interest rates either. And what you're then getting is you're getting both the 𝗙𝗫𝗊 and the US dollar both weakening at the same time. And Arthur Hayes refers to this as the debasement trade, right? So he says the new TradFi meta-narrative is the debasement trade. It took them almost 20 years to notice. Don't believe for a second that they're going to just forget about the debasement trade because of the 4-year cycle. So what they're realizing now is that the world's major currencies are starting to debase. Countries are starting to print their way or to loosen financial policy to get themselves out of trouble. And what that's doing is it's putting more money into circulation. That more money in circulation is pushing up risk assets. And so when you look at any risk asset right now, every single risk asset is basically ripping. You look at the SP 500, all-time highs. You look at gold. Look at that. Look at the SP 500 chart. You look at gold. Gold, all-time highs. You look at the NASDAQ, all-time highs. You look at all of these are all at all-time highs. Look at the Nikkei. I haven't looked at the Nikkei today, but I'm almost guaranteed that there's all-time highs, right? So what you're getting is you're getting a currency debasement, but you're not getting it from one country. You're basically getting it from all the superpowers of the world. It's almost like usually the countries devalue one against the other, but now they're all like devaluing and devaluing and devaluing and devaluing and devaluing. And what that's causing is it's causing people or the market to actually start worrying. And so what are they actually doing? Wall Street has realized that there is this debasement trade, and Wall Street has realized that gold and Bitcoin are merely doing, as Pomp says, gold and Bitcoin are merely doing what central banks have failed to do, to protect the purchasing power of the people. And so what the people are doing is they're starting to put their money into gold and Bitcoin. They no longer trust the central banks. The central banks and the governments are have basically all let them down. And now they're all starting to move into these these currencies. Now, you know what happens when a currency starts debasing? It starts to accelerate parabolically. And probably the best way to see that is if you take the JPX index and you invert the scale over here. So you take the index and you just invert the scale. Look at that chart. The chart is a parabolic chart, right? Why is it a parabolic chart? Why is it so important that it's a parabolic chart? Is because once you start debasing, it becomes an accelerating process. It goes faster and faster and faster and faster. And so that's why they're starting to turn to the hard assets, which are the gold, the silver, and Bitcoin and ETH. Now, today I had a look at the Bitcoin and ETH numbers from Wall Street. And let me tell you, I actually, to be honest, my mind was a little bit blown, right? Why? Because if you think about the US is one country. Yes, it's the world superpower, but it's one country. And they've had ETFs for a very short period of time relative to the life cycle of Bitcoin. I mean, I think the ETFs are about a year old, or maybe just over a year old. And when did the ETFs launch? When did the first Bitcoin ETF launch in the United States? Let's have a look here. When did the first BTC ETF launch in USA? I actually don't know what I would do without ChatGPT. No, man, not the first one. 2021. No, man, this is wrong. 2024. So it's about a year. It's about a year and a half ago. And I was looking at the numbers just to get an idea of how quickly Wall Street is moving into the ETFs. And the number shocked me. The number is that if you think of the amount of Bitcoin and ETH that TradFi in one country, which is the United States and Wall Street, actually own, what do you think the number is? Tell me in the show. What do you think the number is? So the number is 15%. So between DATs and ETFs, Wall Street own 15% of the total Bitcoin supply, and they own 10% of the Ethereum supply. So you can see that these guys are starting to run into hard assets. If you look at the silver ETF flows and the gold ETF flows, silver had, for the last 2 years, silver had outflows out of the ETFs, and this year silver's got massive inflows into the silver ETFs. So what you can see is that Wall Street has caught onto this debasement trade, and they're starting to very quickly start getting into physical assets, right? It's gold, it's silver, it's Bitcoin, it's even stocks and a whole lot of other things. And that's why right now, if you take a gold trade and you say, like, let's take gold for this entire century, for the whole 2000s, gold has actually outperformed the stock market. So gold's on an absolute tear. The best way to visually look at this is to look at this debasement trade chart, which we actually made, right? And what you can see is you can see all the risk markets going parabolic, which is gold, Bitcoin, S&P. You can see Bitcoin's lagging gold in terms of the parabola, and that's happening because the 𝗙𝗃𝗧 is going down. And if you want to see it even better, you just add the Japanese index, and you can kind of see those two are going down, and then all these are going up, proportionately. So that is the debasement trade. That's the theory behind it. It's all about more global money supply and the current currencies that we have basically being debased and devalued amongst each other. But then we get to the more important chart, or the chart that, in my opinion, is much more important. And the chart that is, in my opinion, much more important is the silver chart. Now, let me show you why I think the silver chart is a much more important chart. If you look at the gold trade is becoming a very overtraded trade. That's the chart of gold, and that's the RSI of gold over here. If you look at the current RSI of gold, it's trading at 92, okay? 92 on the RSI is the highest the RSI has ever been in gold. Look, you can go back. I've gone back, not ever, but I've gone back all the way to 1980. And right now, gold is the most overbought that it's been since 1980. Okay. When a chart goes parabolic and the RSIs go very high, naturally the RSI corrects and the trade actually corrects. And I think that that's exactly what's going to start happening here. I think the gold trade is becoming overcrowded and overtraded. And I think that what's going to happen is the gold trade is going to start cooling down. And when the gold trade starts cooling down, the question is, where's everybody going to go? Now, what we know about this is that when the gold trade overheats in TradFi, the market actually moves into silver, right? So if you think about it like this, capital flees fiat for gold. This is the safety trade. We've seen it before. Once gold gets overbought, the same capital looks for a higher return, just like in crypto when capital goes to Bitcoin, and then from Bitcoin we go to ETH, right? They'd go from gold into silver. And now what you can see is on today, silver actually breaks it's finally breaks the multi 50-year pattern and actually does the cup and handle. Now, the thing with a silver break is that a silver break is a very, very, very strong break. And the reason why it's a very strong break, just look at the break here. That was the first silver break. You see, well, there was actually one here, but I don't even know if I can get that time frame to see it. So that was the first silver break there. This actually shows you, I mean, this will blow your mind. So that was the first silver break of the first cup and handle. So that's the cup and handle there over there. And that was the first silver break of the cup and handle. It took silver from $1.90 all the way to $7, which is big. Then we broke from $7. That's the next cup and handle. We broke from $7 and we went to $47. Again, it was a 7x. Okay, so the first move in silver was from here. It was from 190 all the way to $7. That's about a 4x. The second move was from 7 all the way up to 49, which is about a 7x move. Then we have now a 50-year cup and handle. And imagine we just get a 7x move here on silver. Silver goes to $200 or $300. And in fact, just before the show, I landed up buying a little bit of silver, not a lot, just in case this does what I think it's going to do. I want to be there for the ride. Remember one thing about silver is, unlike gold, a very fundamental asset. So gold is a store of value. People buy gold, people keep gold in a vault, people keep gold in a central bank, and they keep it as a store of value asset. Silver has much stronger fundamentals. Silver is actually utilized a lot in production. Silver is not just stored in a garage or in a bank. Silver actually has renewable energy applications, automotive applications, advanced electronic applications, etc., etc. So silver is fundamentally a very strong asset. And silver has been in a deficit for a long period of time. And now we're starting to see this the silver turn. Last year, we had outflows, ETF outflows. Silver-backed ETF experienced positive inflows in 2025, reversing the outflows observed during the previous 2 years. So now we're starting to see the market go back into silver. So here's what happens. Here's what happens. Traditional investors used to go gold into silver, but now there's another alternative out there, which is a very strong alternative. So you can go gold, silver, Bitcoin, or gold, Bitcoin, and you can completely bypass silver. And that's why I think that the more important chart for Bitcoin is actually to look at the silver chart. And if the silver chart breaks out, that's our cue that the Bitcoin chart will actually break out. So then what I did was I said, okay, hold on a second. If that's the case, let me go back to all the previous times that silver broke whilst Bitcoin was alive and see how did Bitcoin perform when silver broke out of some kind of pattern. And here's pretty much what it looks like. I want to actually just get you guys some charts. Here's one of them. Let's see if we can get you some more charts. Okay, so let's look at the breakout patterns of silver. So we had a breakout in 2016. We had a breakout in 2020. We had a breakout in 2022, 23, and now in 2025. Now, if you look at the silver moved 47% in 2016, and Bitcoin moved 9,000% in the same period of time. So if you take the 2016 chart, I think this is the 2016 chart. Yes, it is. 2016 chart. Silver makes a move, a 50% move. Bitcoin has a lag, a 100-day lag, but Bitcoin makes the biggest move that it's ever actually made. That was the first silver Bitcoin correlation. The second silver Bitcoin correlation was in 2020, and silver went up 101%, and gold and Bitcoin and silver actually moved up at exactly the same time. So here's 2020. There was no lag. Bitcoin and silver both actually moved up. How much did they move up? COVID, silver moved up 100%. Sorry, Bitcoin moved up. Silver moved up 100%. Bitcoin moved up 2,000%. And so what you can see is that when you look at Bitcoin versus silver, you realize that Bitcoin is much more correlated to silver. And when silver actually starts making an explosive move, within 2 to 3 months, Bitcoin actually follows and starts making an exclusive move. And so the bottom line here is that whilst everybody is looking to the gold chart to see Bitcoin's next move, the smarter money should actually be looking at the silver chart. And if we actually get a breakout in silver, then that's our cue that people are moving much more into the riskier safe haven assets. And when we move to a riskier safe haven asset, that is when Bitcoin will actually land up exploding. So this chart tells me that within a month or two, if silver breaks out, Bitcoin actually lands up going with it. Now, I am seeing a lot of stuff about gold and how high gold can go. Matthew Siegel, he's from from Van Eck. He says, we've been saying that Bitcoin should reach half of gold's market cap after the next halving. Roughly half of gold's value reflects its use as a store of value rather than in industrial jewelry demand, because that's what I said to you. And surveys show younger consumers in an emerging market increasingly prefer Bitcoin for that role. At today's record gold price, that implies an equivalent of $644,000 per Bitcoin. And so they have some model that shows that if you take that model, it takes gold to $644,000. So right now, this whole trade is actually about Bitcoin versus gold. And we actually know better that it's actually Bitcoin versus silver. It's not about, it is a catch-up trade to gold. Ultimately, it's all about debasement, though. It's all about all the currencies debasing. And as a result of all the currencies debasing, it's people fleeing government-issued currencies and actually going into hard assets. And the biggest gain is gold, silver, and now Bitcoin. And eventually that will flow into altcoins. So that's basically what's going on out there. Otherwise, pretty quiet, like actually on the markets. I mean, except if you bought Zcash or Co-AI. Let's look at the other 200. Yeah, very little actually, very little else moving on the market. Just a quick reminder, number one, if you haven't joined Frontrunners and you're still not convinced after all this SQD, we called Zcash at 150, it's now 200. Honestly, guys, like you can easily just join, and if you join and you don't like it, just get your money back. It's so simple. There it is. Just hit that link. Also, remember BitFunded. If you want to trade with a funded account, just remember that they've now got a one-step funded account. This is honestly the easiest place to get a funded account in crypto. This is the easiest place to get a funded account in crypto. That's on BitFunded. You used to have to go through 2 steps to start trading with other people's money. Now you have to go through 1 step. Just go to bitfunded.com, sign up. Go do a 1-step evaluation. You can get an account as big as $100,000. Yeah, that's it, guys. That's it from me for today. I'll see you guys again tomorrow. Until then, trade well, my friends.